Hello everyone and welcome to today's morning report with me, Richard Herring, market analyst at Home Tech Markets for Tuesday the 17th of June. The equity markets in the European trading session have found a bit of support early on, and that's been helped by a bit of support that was found yesterday on Wall Street after the positive US data that came out yesterday afternoon. Industrial production and the housing market index both showing signs of improvement. And that sort of acted to counterbalance the concerns that we had over Iraq, or we continue to have over the escalation of tensions in Iraq. Certainly that filtered through to a fairly mixed Asian session, but Nikkei in Japan was certainly helped higher by the announcement of further measures for Japan and the economic reform as part of Shinzo Abe's third arrow, that certainly cheered equity market investors in Japan, and that has been reflected in the early gains in Europe. Certainly the DAX benefiting very strongly early today. In terms of currencies, the dollar is actually forming support and found gains against pretty much all of the major currencies today. Certainly against the yen and also against the Aussie dollar, two main ones there, is benefiting on the back of there. So what we've seen is, as I said, the improvement in the dollar has seen an uptick in the dollar index overnight after some fairly sharp declines over the past few days for the dollar, but certainly a bit of support coming in there. Just very quickly though, on to the back on the VIX. Having reached these incredibly low volatility levels, the VIX is now continuing to increase, and that would suggest that equity investors in the States are beginning to now take out possibly some index options to hedge their portfolios. So that's something to watch, and that could be something that we see come creeping through in the next few days. The possibility of a little bit of stalling of the upside, and possible that equity investors are beginning to be a little bit more fearful of these runs higher that we've seen on the equity markets, but we'll see how that one pans out. But anyway, in terms of economic data today, we've got the inflation data for both UK and US, and that could certainly have an impact on cable. The UK CPI is out at 9.30. It's expected to come in at 1.7%, which is slightly down from last month's 1.8%. But that would still be a fairly nice and stable level of inflation there for the UK, still underneath the 2% target that the Bank of England has, but certainly it would be a nice levelling off of inflation for the UK. You've got the US version as well at 130 CPI. Again, it's forecast to come in at 2%, which is basically where it was last month, and again that would be fairly flat and reasonably positive, a bit of data there. You've also got the German ZEW Economic Sentiment Index at 10 o'clock in UK time. 35 is the expectation there, up from 33.1, but also then you've got the US housing starts at 130 as well, and an expectation of a slight decline, around about 3.9% off, back down to 1.034 million is the expectation today. So that takes me to my chart today, which is Euro Sterling, and Euro Sterling has been on a strong run lower, but it shows now signs of possibility of a base or a bottom coming in, or certainly some support. Yesterday we've got this very positive green candle that is the first positive candle we've had in the last 2 weeks, and you could even argue that's some sort of formation of a hammer candle. But that low at 79.56 actually coincides. I'm going to go back quite a long way here, but you can see this low that comes in from these key lows back in 2012, which helped to form a big head and shoulders reversal pattern, and those key lows formed the support of that. So around about 79.50 were those key lows. So that's sort of there or thereabouts. So that's possibility of a recurring support theme coming in there. and also you've got this RSI that was at the lowest point on the chart since dating back all the way to May 2012. So certainly it would suggest that the downside potential possibly is limited from here, with the support coming in and stretched momentum. And you need to, I think, be careful of that. And there is the possibility of, if not further, if not a bounce, then maybe even just consolidation at these levels. And I think in your trade management, you need to bear that in mind, that possibility, and also that downside potential is fairly limited at these levels, possibly here. So in terms of bouncing back to resistance, well, you've got this 21-day moving average, which has been the basis of resistance throughout the past 2 months. Time and time again, it's capped the gains on the upside, and that comes in at 80, that's around about 100 pips above here, one big figure. So there was certainly room for a bounce if there were to be one. You'd certainly be saying that the initial resistance, key resistance, comes in at 80.73. So those lows that were the back end of May that could now act as resistance, also that 21-day moving average. So there is certainly room for a bounce in euro sterling. So we need to be mindful of this, certainly with this RSI being so oversold. The intraday chart doesn't show us an enormous amount, although you would argue that these moving averages are still capping the gains on the upside. But I think you start to think about 80 big figure being a bit of a level on the resistance side. Seems to be capping the gain. So if you started to break above the 80 big figure level, then maybe that would start to open out the upside on euro sterling for a recovery. But, we'll see that if that starts to happen, then we might start to think about the possibility of a long position in a near-term bounce. But I think that would still be a bit of a risky play, certainly with the big macro picture still suggesting euro sterling weakness. But we won't see if that move above 80 big figure can be found. Anyway, in terms of support, as I said, that 79.56 level, and also there is a minor basis of support around 79.80 as well. So maybe you can start to think about that also. But in light of what I just said, I think the momentum indicators also, we argue that there's a bit of a recovery going on in terms of momentum. It's certainly over the course of the past few days, it hasn't really been able to move above that mid-50s point, but yet yesterday it started to push above. So that does now point towards the possibility, as I said earlier, of a recovery building. Anyway, so I wish you good luck in your trading today in euro sterling, and I will speak to you later.